All of our viewers know why Apple had a huge quarter. Because when the lockdowns hit, everybody scrambled to buy their kids iPads for virtual learning, buy themselves a new phone, new computers. Is there any way that kind of momentum stays?
I mean, that's a little bit of a million-dollar question. I think there's other parts of Apple's story where they don't really have to rely on just continued, say, hardware momentum going forward. I mean, obviously, services continues to grow at a healthy clip. That came in well above expectations. And for me, and for Wedbush, obviously, you mentioned iPhone, revenues earlier. That they beat that number by 17% ahead of consensus. And China growth was 87.5% year over year. And don't forget, not that long ago, in the midst of the trade war, there was a real fear that there could be a "Don't Buy America" campaign in mainland China because of the ongoing battle between Trump and President Xi. But clearly, that's never kind of materialized, and they're firing on all cylinders across the world, across almost nearly every product that they have. And the magnitude of the upside of this quarter versus where the street was is pretty comical when you think about it. I mean, they just smashed it.
Amazing. And what do you make of a $90 billion buyback? By the way, Joel, you add Google into that, $140 billion in buybacks announced by just two companies.
Yeah, I mean, you obviously have the capital return boost from these companies, but I mean, right now, Amazon's left to report tonight, but this could be one of the best earnings seasons we've seen so far from mega tech, at least in recent memory. Google Tuesday night, Apple and Facebook last night, Amazon's tonight. And they're really telling you, if you don't want to buy their stock, if you're a little bit concerned about maybe this is the best it's going to be, well, they're happy to buy the stock instead. So, I mean, I think the trend is higher. I mean, Facebook especially breaking out on volume today, and Apple's testing those highs as well. Path of least resistance is higher for these large caps.
Let's talk Facebook, all right? Because Facebook gets a lot of heat. Maybe it's deserved, maybe it's not. You see the hashtag delete Facebook things that go around social media. Not only is nobody doing that, Facebook has now effectively become the internet. Their sales were up 48%. Joel, yeah, they said things may slow down in the second half of the year, but slow down from what? I mean, Facebook shares are up 7%. These were monster numbers.
Yeah, and again, I mean, and Facebook's probably one of the cheapest of the whole group, and clearly you're seeing a re-rating this morning up, already 700 basis points. But I mean, advertising, advertisers, rose 30% year over year in terms of price. Ads delivered were up 12% year over year. So you're seeing larger advertisers continue to shift their budgets to social media sites, and then on the smaller side, small and medium-sized businesses continue to ramp up their digital outreach to consumers. And I think what this quarter showed us is that this transition, which really kind of was accelerated by COVID last year, is still in the early innings of kicking off, especially when you go down the chain to the smaller and medium-sized companies. And I mean, again, the top line beat, which you highlighted earlier, was staggering. The top line guide for Q2 is off the charts. And in terms of their cautious guidance and commentary in the second half, this is simply just a reiteration of what we heard 3 months ago. They're notoriously conservative, so I don't think it's anything to get too worried about when they talk about decel in the second half. From our ad targeting headwinds, they relayed that message to the street and investor base very clearly now, and I think they're doing the right thing. Again, the platform's toxic. I hopefully my kids it won't be around by the time my kids are of age, but clearly that's where the ad dollars are going and the eyeballs remain.
Well, good luck with that, Joel, because Facebook, despite all those cries, continues to just get bigger and bigger. And as everybody's locked down in the Northeast and Chicago and California, everybody's pushed online. All right, those numbers are out. Let's get the numbers that are coming out. And that is a little company you might have also heard about during the pandemic. It's called Amazon. You buy stuff, they deliver it to you. They also have a cloud business as well. Their phone business, not so much. Amazon's numbers, Joel, are out tonight. I mean, the expectations were high, but given what we've seen from Apple, Facebook, and Google, does Amazon need to just absolutely destroy estimates for the stock to move?
I don't think destroy. I mean, it's funny. You look at large cap growth, other than really Alphabet, going back to early July, these stocks have been stuck in a range. For Amazon, that's been 3,000 to 3,500, and it's bumping up against that top end today into the print. And what I'm looking for is obviously AWS. Clearly Azure continues to put up some staggering growth numbers. For Microsoft, they put up back-to-back quarters of 50% growth. AWS put up 28% growth last quarter. That right now consensus is about 22.5%. Buy side's clearly ahead of that. But I mean, I think if we can see high 20s to 30% AWS growth, that could be the catalyst to get the stock higher. And then with COVID kind of restrictions expenses kind of fading as vaccinations rise and just kind of we return to somewhat normalcy. The margin profile for Amazon's a big focus with investors tonight, and that could be what really helps drive the re-rating higher, say, and finally punch above that $3,500 level. So for me, AWS and margins are the two key things to watch tonight with Amazon.
Shepard Smith here. Thanks for watching CNBC on YouTube.